Today. Now, there are 10 minutes remaining until the closing bell. Helping us to break down the trade is trader Dan Deming of Stutland Equity, standing by live at the Chicago Board Options Exchange. Our featured guest is a big bear, Joe Saluzzi, the co-head of equity trading at Themis Trading. So I'm going to start with you, and I'm going to start with, I did this, I think, last time, January 13th. You said the S&P might fall to the mid-600s. We're not even close by the end of the year.
Back again, Carol. January, what was the S&P then? It was around 900. We got to the mid-600s in March.
Right.
So I was right if we look at it then. We just didn't expect this type of rally off the lows.
So you say we're not going to go down to that level from here?
Yeah, I wish I had the crystal ball, right?
But you are so bearish. So, I mean, how bearish are you?
Well, I'm bearish on the economy. I guess we have to kind of separate things. The stock market, we've talked about this every time I'm up here.
There is a separation going on, isn't there?
Every time I'm here, we say, what's going on with the stock market? The stock market has a mind of its own. And who is buying in the stock market? Well, that's not necessarily long-term investor, fundamental value guys. These are more short-term speculative people.
It's not the institutional money.
Here's a quick fact for you. The ICI Institute, the Investment Company Institute, 27% decrease in institutional volume in domestic equities year over year, yet the market volume is up 16% since last year. So it doesn't jive. Those numbers are coming from the ultra-fast, high-frequency, speculative firms. And they come in the morning flat and they go home at night flat. So they're not investors. That's why the stock market's doing its own thing. But if you want to talk about the economy, I'll give you a million bad points in the economy.
That's why he's wearing, notice his tie.
I know.
Yeah,
there are bulls on his tie.
First of all, this was a gift from my friend Stu, and this is a bullish tie, but I'm bullish on ultra-bear ETFs.
All right, so you're not a bull, not even close.
Let me bring in Dan Deming here.
In your head.
I know. Dan and I are in the same opinion. It just makes no sense. Everybody I speak to, whether it's bulls or bears, can't believe where we are right now. And you just look at what Obama said in the Fox interview last night. The potential double dip if we have too much debt, if we don't decrease the deficit. Why is the dollar going lower? Because there's so much debt out there, and there's no stopping it, right? So he's basically telling you we're going to have a double dip because there's no way he's decreasing the deficit.
Now, you got to, though, understand why we're here and where we're going. I mean, James Bullard came out today and said maybe they won't raise rates until 2012, right? You don't want to fight the Fed. Right. You're hearing a lot more about a second stimulus package. Yep. That's good for the market, hopefully good for Main Street, but clearly it takes a lot longer to trickle down from Wall Street.
I argue that a stimulus is not good now. Enough is enough. And we talked about this last time. Let's stop giving medicine to the patient and see if the patient can stand on its own. How long do you want to give stimulus? How much time to cash for clunkers? And by the way, the 3.5% increase in GDP, I'm already hearing they're notching it down to 2.5%. And of that 2.5%, what was cash for clunkers and first-time home builders? The economy can't stand on its own, so you got to pick a camp.
We don't know that yet. We won't know until we start pulling back on all those stimulus moves. We don't know it.
Well, I think we do because, I mean, just look at the jobs. There's no chance in getting a lower unemployment number. The people, what are it, 11, 12, what's the S? The only way the economy is going to pick up is if you start to get some jobs, and there is no help right now in the job market. The administration is not even addressing the jobs. They'd rather address everything else.
That's not true. They're going to come up, they're working on a job for them. They're working on things.
How about they should have done that about a year and a half ago? Yeah.
Next year.
Maybe Goldman Sachs will help them out with that $500 million.
Listen.
Utility is going to continue to come out of this market. If that's the case, then the market's going to be able to probably maintain these levels to some degree over the next couple of months.
I agree with Dan, and technically speaking, it looks fine. And buying begets more buying. And then you've got this performance chasing at the end of the year. If you haven't been in, you're going to look like an idiot. So people are all involved. But it doesn't mean that the problems are fixed. Even though a chart looks great, it doesn't tell me much about the economy. You guys heard the Bernanke speech the other day.
We're much better than we were a year ago.
No, I will not say that. Listen to Bernanke's speech on Monday. That sounded like the most dismal, dreary speech. I would have thought that we were in the middle of a depression.
But you're a trader, not a human rights activist. I mean, you want to make money in this market, right?
And what do I say when I come here? I'm not going to fight the tape. I'm going to let it go. I don't believe in it. I may not want to short it here, but I certainly don't believe in this market. And I do think, and everyone's been talking about this late thing going on Wall Street. When the music, the music's playing, everyone's dancing. But when the music stops, what happens then? They're going to run for an exit door about the size like this, right? 1 million people going for the same exit door.
Is that when we go to S&P 600 in your view?
Look, they took it down that fast. They could take it down again. There are no real buyers, by the way, in my opinion. And the bids would disappear. People make one-sided markets now. They don't have to stand up anymore. There are no real market makers.
Let me just get a quick check in the markets before we hear the closing bell. We have about 2 minutes left. Take a look at where we stand. Nobody
All right, got it, Laura. I want to go back to our guest, Joe Saluzzi, and we've got Dan Deming over in Chicago. So you're saying, of course, Laura's making some comments here.
It's so frustrating. I mean, it really is. Everyone is bullish, and everyone thinks we're going, they think it's the merry-go-round is never going to stop. But look, stimulus doesn't work, okay? It's not going to continue to work. When will the states get bailed out?
What do you mean stimulus doesn't work? We've used it before.
It's artificial.
I understand that, and I've argued that point.
And we haven't seen any sign of an economic improvement.
That's not true. We're not falling off a cliff anymore.
And by the way, 10% of GDP being a deficit, that's not a good thing, okay? And it's getting worse, all right? And here's the thing. If the states are all running a deficit, which they are, and some are estimating $350 billion total for the states next year, they got to get bailed out. The FHA, Bob Toll Brothers said today, is the next subprime crisis in the waiting. The FHA. So they'll need a bailout. Who else will need bailouts? And then the stealth bailout of the banks by the savers of this country who are getting 0%, which is the biggest fraud, by the way, in the world. The elderly and the savers getting zero to finance the banks.
I got to point out, it's pretty easy to get on board with this theoretically, right? And it's almost fun because it's so dramatic. But it just hasn't happened. The sky is not falling. Everybody said California is going to be an absolute train wreck. It's going to pull the whole country. It didn't happen. The FHA, I've been hearing about this from conspiracy theories.
You're 7 months from the low. We've got a long time still.
I mean, Dan, that's the point. I mean,
Joe Saluzzi, always a pleasure.
Thank you, guys.
And you guys made a great team. We need to get the two of you together more often.